Hi everyone, welcome back to the channel. My name is Vandell, co-founder of Black Swan Capitalist. So in this video, I want to talk about the US debt crisis. It's actually becoming one of the biggest issues of our time, and it's not just going to affect people in the United States, but the truth is it's actually going to impact the entire world. So back in the 1980, the national debt per household was approximately $39,000. Today, in 2025, it's already shot up to about $273,000 per household, something around that. Now, at the time of this recording, the US debt has already blown up past $36 trillion. And the truth is, it's actually just getting closer to $37 trillion. Now, that's $11 trillion more just since 2020. So as you can see, there's a lot of problems with the debt. It's actually a debt crisis. And just this year alone, the US will spend over $1 trillion on interest payments. That's actually more than its entire defense budget, which is insane. And it's almost the size of Switzerland's GDP. Now, on top of all of that, we have about $9.2 trillion in US debt that will mature in 2025, and it has to be refinanced. So what that means is they're going to print even more money and increase the money supply even more than it currently is, just so they could pay the previous interest. And the reason they're going to do that is because they don't have the money. The government does not have the money on hand, and it doesn't get enough from GDP. So the debt is going to increase much higher this year and the next year. So if you're wondering, why does this even matter? Because this isn't just some number sitting on a government spreadsheet or just some abstract numbers on a ledger. It's actually a very real problem, and it's setting up a serious challenge for not just us in the coming years, but for future generations in the coming years. So it's not just America that's at risk here. A lot of people think it's just the US, okay, but it's not. This growing US debt could actually turn into a full-blown crisis globally for all global economies around the world. So you see, if America can't pay its debt, the impact won't just stay within our borders in the US. It's actually going to ripple across the entire world. And that's the problem we're facing right now, because the debt is reaching unsustainable levels and only growing. So the big question is, okay, so how will this happen exactly? How could this manifest? So in this video, I'm actually going to give you two sets of very realistic potential outcomes for America based on the data and my own sound judgment. And I'll give you an outcome that's somewhat positive and one that's far more negative. Nonetheless, this is realistic and it's worth listening to, because at least you could prepare ahead of time. So we'll dive into also who America is actually in debt to. And this is important because for every borrower, there's a lender. And I'll talk about why the debt is also growing so fast and what the key financial institutions that actually oversee the entire monetary system, what they could potentially do to try and avoid a complete financial collapse, and what they potentially might do if they can't avoid a collapse. So at the end of the day, it's all going to come down to the policy response from the central banks and the government, because we are on that path already. The debt is rising at an unsustainable rate, and it's already at unsustainable levels. So we'll start first here. We're already above $36 trillion in debt in the United States. And honestly, we should be actually very proud, because the truth is, it's funny because a lot of so-called renowned economists actually said this is something we would never pull off. And we have. So we're here today. And here we are already heading towards $37 trillion in debt. And it's coming sooner than we think. And that's not going to change anytime soon, in my opinion. So let's break down the US debt problem in simple terms first, so that you could have better context. The US government heavily relies on the nation's economic output and basically economic growth to pay its financial obligations. Okay, because the US needs income to pay its obligations. That means citizens like you and I, businesses, we work, we earn income, and we pay our taxes. And what happens is those taxes actually fund government and the government spending. So things like public services, the military, black budgets, social security, roads, and of course, interest payments on their debt. Okay? So now this works like this. So think of the government like a person with a credit card. And if that person spends more than they actually make, what they'll do is they'll start putting that difference on the card. Okay? So eventually, they have to pay it back at some point with interest. So not just the principal, but the interest as well. Well, the US government isn't exactly the same. It's a little bit different, but it's close enough for this example so that you have a better visual of how it actually works, okay? So the government keeps piling on more and more debt. And with every dollar borrowed, what happens is more interest accrues, okay? So they keep borrowing and the interest keeps racking up. But since they don't have enough revenue to cover the interest payments, what happens is they borrow even more money and print more money and borrow it into existence to pay the interest. So as you could see, the interest gets paid, but the debt itself never does. And that's why the national debt keeps racking up and increasing. So what happens is they borrow more to cover the gap. And the more they borrow, the more the debt grows over time. And the more the interest grows along with that. So it just keeps growing, turning into basically the whole system is going on this never-ending cycle. And it's based on the debt. So in summary, the government consistently spends more than it brings in through taxes. And this is the problem. This is the main source of income. But they don't generate enough income to cover their cost and their expenses. So to keep functioning and to avoid an economic collapse, America just keeps kicking the can down the road and has to keep borrowing even more and more just to make the payments on its credit card. So that's how it works. So again, it's a never-ending cycle and the debt just keeps racking up. Now, who does the US actually borrow from and who do they actually owe money to? So I'll explain that very shortly in the video, just momentarily. But before I get to that, I want to bring up a very important point, because here's where it goes from being a problem to a full-blown crisis, this whole debt issue. It's when a country's debt repayments actually become too big for its economy and its GDP to actually really cover. They can't realistically cover it. That's the issue. So that's where we are right now currently. That's what we're dealing with. So the US government's spending has basically gotten out of control. Many economists have been outspoken about this, and tax revenues can't keep up. And that's why central banks go through this debt refinance cycle every 4 years. since 2009, because the government and the central banks have to refinance the debt, which interestingly 100% coincide with the 4-year crypto bull run cycles that we experience every couple of years. They 100% line up perfectly. So there's a strong correlation there. But back to the debt, currently America's debt to GDP ratio is about 122%. So what that means is, in simple terms, is America owes more than it produces in a whole year. And what's crazy is this is the highest debt ratio in American history. It's never been this high. It's even higher than during World War II. And the crazy thing is, back then, we were actually fighting the largest war in human history on record. So today, we're in a worse situation and there is no world war, okay? And the debt is still exploding at an unsustainable rate. And it's crazy because economists are already calling this some economists are saying this is a sovereign debt crisis in the making. And normally, when you hear the word sovereign debt crisis, usually you think of emerging markets. So for example, like what happened during the European debt crisis in 2009. So when countries like Greece were in trouble, that was a sovereign debt crisis. But now people are basically uttering those same words, sovereign debt crisis, in the same sentences as the United States. So this just tells you how bad things are really getting. And I'm going to get to the points where it's going to affect us and what we could do about it. So for the government spending cuts that you might have heard about lately from Doge and Elon, a lot of people think they were effective, but they haven't fixed anything, and I'll explain why. And they won't, because as big as the cuts sound on paper, they're basically a drop in the bucket in the grand scheme of things. And I'll tell you why. It's because, sure, the budget deficit fell by about $76 billion. And at first glance, it sounds really good. Again, it sounds good on paper. But here's the thing, it's still a deficit. So we're still in a deficit. And they cut spending in one area, but then they offset it by spending somewhere else. And that's actually what they're doing now. And the cuts weren't nearly big enough to really make a meaningful impact. And the reason is because the debt and the spending is so large. So that's the problem. So the issue is still getting worse as we speak. Now, so you might be wondering, okay, but how bad is this national debt crisis really? And what does it really mean? Well, this is extremely important because it affects everyone, okay? Not just in the United States, but globally. So whether you realize it or not. You see, the government's been kicking this can down the road for a very long time. As a matter of fact, from the 1980s to the 2000s and right up until today, pretty much. So it's been going on for a very long time. And the debt hasn't just grown, it's grown at an accelerating pace. And the truth is, all the politicians participate regardless what you think. And the reason that is I actually have my notes here, but if you look at the numbers, you'll see, so under the George Bush administration, so about 6 trillion was added, and that was mostly due to the Iraq and Afghanistan wars, invasions. Then under the Obama administration, the 2008 financial crisis and stimulus packages added around $9 trillion. And then Trump added about $7.8 trillion, mainly through tax cuts and increase military spending. And for Biden added approximately $5 trillion, mostly from the COVID stimulus programs, okay, during that event that took place. And fast forward to June 2024, the IMF, which is the International Monetary Fund, they officially warned that America's growing debt poses a serious risk, not just to the United States, but to the entire global economy and the whole financial system. You see, the US debt has been the giant elephant in the room for decades. And the truth is, no politician wants to touch it. That's the issue, because it's such a big problem. So they can't fix it without causing serious pain to the economy and to the financial markets. So what they do instead is play this game of political hot potato, where they just keep passing the problem down the line until, something fundamentally breaks at some point and the music stops. And when that happens, well, the infrastructure for the solution to that problem has already been built a long time ago, and it's been in the works. It's blockchain technology. It's digital assets to facilitate liquidity and liquefy the system. Assets like XRP, XLM, the XRP ledger, tokenization. It's all being quietly developed behind the scenes, and it's been positioned for over a decade now, for a very long time. It's nothing new. They've been preparing for a long time for this event and this shift taking place. So don't focus and get distracted with the headlines. The evidence, the documentation, and all the clues have been available for a very long time. Now you're starting to see it become more mainstream narratives around it, but it's been there. And the masses are just starting to hear about this now. But it's been there for a very long time. And so the World Bank and the IMF, again, which is the International Monetary Fund, the big institutions, the central banks, the United Nations, the banking cartel, basically, they all know that a reset is happening and a collapse moment is coming. And they've been preparing and getting ready for that moment for a very long time, or at least for that transition period. And we're actually living through a reset right now as we speak. It just hasn't fully manifested yet, and we're currently just living through it. So now it's important to understand also that when I say reset, it doesn't have to mean a catastrophic collapse when everybody and their grandmother is rolling through the streets with a Humvee and, machine guns. That's not what I mean by collapse. That's very unlikely. What I mean is a controlled strategic demolition and transition that makes sense in this scenario, because they've been preparing for this for a long time. So they have a way to all coordinate together and control it in a fashion that doesn't create destruction and get to a point where they can't restore law and order. But nonetheless, there will be pain still. So there could still be a devastating financial market collapse or crash as well. That's not out of the question. But it doesn't mean it would be also a smooth transition for everybody. It just means it won't be a full-blown Mad Max scenario. But it still will be a crash or a collapse of some sort. And it will be painful, even if it's a controlled demolition and reset, which some people argue it is. Now, to be fair, the principal amount of the debt, the $36.7 trillion as we are today, that the United States government, it's not just the debt itself that's the problem, okay? Because the truth is other countries like Great Britain, technically still carry debt from as far back as the Napoleonic Wars, okay? So the real danger is the exploding interest payments that keep growing combined with a shrinking tax base. So it's just not the amount of the debt, but the growing, interest along with that. So because if the US government can't generate enough revenue, those growing interest payments could eventually break the back of the United States government, okay? That's the problem here. And when that happens, that's when these new blockchain-based systems and infrastructures and solutions could be rolled out. It's very likely. Not as an experiment, but as a ready-made solution to a major financial collapse that could help control the situation and still maintain control for the financial institutions that oversee the monetary system. And we're getting closer to that breaking point. It's getting closer than people think, because the chain reaction has already started. The problem is only accelerating as we speak. And it's interesting because after the COVID shock in 2020, inflation really started to accelerate fast. We all know that. We all experienced it. We all seen it. But the Federal Reserve actually stepped in during that time, and they did what they usually do. They raised interest rates to cool things down, slow down the economy, and slow down economic activity. But here's the problem. Those interest rates didn't just hit mortgages and credit cards, okay? They also hit the federal government's own debt. Do you see what's happening here? And as rates climbed during that time, interest payments on the national debt also exploded. Now, these payments are currently sucking money out of the federal budget. That's happening as we speak. Money that basically could have gone to rebuild infrastructure in the economy, improve schools, support veterans, for example, maybe even help small businesses. Basically, that money could have gone back into the American economy. Okay, it could have been invested back into society and to make the American people, much happier and improve infrastructure in the country. And if the interest rates stay elevated for any length of time, for any reason, what happens is the problem only gets worse for the US government. And eventually that will ripple into the economy. And that's exactly why the US will likely be cutting rates very soon, even though they just decided to pause the other day. But they will cut soon because they have to. So think about it. What if the interest payments keep rising and the government can't pay? Or what happens if America defaults on its debt? Would the US dollar collapse? You're probably wondering. Would the world head in towards a global Great Depression 2.0? Well, I'm going to explain that right now. And this is just one way to look at it. So there's a few outcomes that could happen, very realistically. So first of all, right now, the interest on the national debt is already the second largest line item in the entire US budget. That's a fact. It used to be the third, now it's the second. Soon, if it keeps up at this pace, it's going to take the number one spot, okay? So you might be wondering, could the US actually default on its debt? And, well, technically, and more realistically, the answer is no. And that's because the US government can pretty much just print money that it needs to meet its obligations. So, but here's the catch. The catch is, by doing that, That's just another form of default. It's like a silent default. You see, if the government keeps inflating away its debt, as it's been doing for a long time, by printing more money, increasing currency units into the system, the value of the dollar continues to fall. And the debt doesn't go away. It just gets paid back later in cheaper money because they keep devaluing the currency to keep the Ponzi going. That's called monetary debasement. And that's happening as we speak. And it's effectively a slow motion default. Okay? So let's play that out for a second. Just think of it like this. Let's say this trend continues for another 10 years, 15 years. The debt keeps exploding. Interest payments keep growing. And eventually, the world realizes that the United States government can't pay and will never pay its debt and pay back the full interest on its debt. Okay? So what would happen then in that situation? Well, to answer that, we have to look at something that most people never really talk about, and it's the US bond market. Okay? The US bond market is the most important thing here because most people focus on the stock market, mainly the stock market, but the bond market is way bigger than the stock market, and it's the most critical thing. And it's far more important when it comes to global financial stability. It's not the stock market, it's the bond market. And the US bond market is the largest in the entire world, with total outstanding debt already exceeding $46 trillion. And it's the biggest asset class in the world as well. So the US Treasury bond is basically the government writing an IOU to investors and basically promising to pay them back with interest over time. It's considered safe, or it has been for a long time, a safe investment. And it's not the US citizens who just buy these, okay? It's also countries, pension funds, big financial institutions. They all buy US debt and bonds because it's historically been viewed as a safe haven, a safe and stable investment, even though it's actually the most unstable, in my opinion. But it's always been seen as safe and stable for the longest period. And that's slowly starting to wither away. But that safety is built on only one thing. It's built on trust. Okay? So trust in the US that's what holds the US up. Honestly, that's pretty much it. If that trust disappears, the entire bond market gets shaky. And that's already starting to happen. We are starting to see the cracks in the bond market. And investors are actually slowly dumping bonds. And if that trend accelerates, well, you see, what's called a bond sell-off spiral could actually take place. It's a bond market collapse. And here's where things get very dangerous. It's if investors lose confidence and no one wants to hold US bonds anymore. Bonds turn into a financial hot potato, and pretty much every investor that holds bonds just wants out because they've lost confidence in the US. Okay? When that happens, bond prices collapse. They fall. And yields or interest rates shoot up because when bond prices crashes, rates go up. So they shoot up to compensate for the risk. So when bonds crash, the rates go up. So picture this. Instead of getting 4% on a 10-year bond, investors start demanding 15% or even 25% because they're thinking, I don't even know if I'll get my money back. So for my bond investment, I want a lot more return for the risk that I'm taking, basically. That's how rates would continue to go up, okay? And that kind of spike in yields would actually be catastrophic, and I'll tell you why. It's because it means the cost of borrowing explodes because rates are going up. Do you see the connection here? And not just for the government, but for banks, for businesses, and consumers like you and I. So the big question is, what happens to the United States if that kind of bond market breakdown actually plays out in real life? How would that manifest? Well, let's walk through two potential, very realistic outcomes. One, somewhat positive, and the other outcome, not so much. At the end of the day, both outcomes will have pain before we get to a better place. You have to understand that. So what actually happens if the US can't afford to pay interest on its debt? Well, it's a complex situation, and honestly, I think there are a lot of different variables to consider and that would play a role. But let's start with more the optimistic scenario. So I have my notes here. Here's how things could actually play out, even if things look bad first. But this is the optimistic side, that optimistic outcome. So the US still looks safe in the eyes of other nations, okay, relatively speaking. So even in a scenario where the US technically defaults or starts missing interest payments, what happens is America could still be viewed as a global economic leader in the eyes of the world. And if the world continues to believe that the US is innovative, has strength and long-term resilience, then maybe investors might prefer US assets over riskier alternatives. So, strange as it sounds, a default might not destroy complete global faith in the US overnight. Second, massive fiscal stimulus. Okay, this is possible, but with a catch. In a crisis, the government would likely step in, as they always have, with emergency fiscal stimulus in order to stabilize the entire economy. And just like in 2008 and 2020, but this would likely crash the dollar's value significantly and cause significant short-term pain for American citizens, for us. But paradoxically, that weaker dollar could set the stage for a huge recovery. So assuming that happens, then it takes us to the third point. Assuming that the dollar weakens significantly because of that, well, what that means is a weaker dollar. That basically means stronger exports if the dollar drops in value, okay? So in simple terms, it means US goods suddenly become cheaper and more attractive to global buyers and investors, okay? This can help bring back industrial and manufacturing back to the US, just make things better for exports. So it will increase demand for American exports and basically help boost manufacturing, jobs, and overall economic growth. And eventually, that boom in growth will lead to a rise in government tax revenues. But the truth is, I don't see this happening because the world is very different today, and most jobs can easily be replaced with AI and robotics, so that it's much more efficient for companies, okay, even if they're coming back to the United States. So unlike previous industrial booms that we've had in the past, that allowed everybody to go back to work and start working and contributing to society, it's different now because of technology. And the fourth thing is domestic investment rebalancing. So this is the fourth point. So what this means is with higher interest rates because of bonds crashing, some domestic investors basically might pull out of riskier assets like stocks or cryptocurrency and move their money back into government bonds as a safe haven, as long as the US remains, in the eyes of investors, as long as the US remains politically stable and appears to be capable of basically riding out this storm. And that's because when bond prices drop, interest rates go up. So that could offer a short-term boost to government financing, and it can become attractive as long as people still have trust in the US. Okay. The fifth point, tokenizing the debt with blockchain technology in an orderly fashion. Okay. So assuming things go south in the future, the US government could use blockchain technology and digital assets as tools to basically manage its debt. Okay. So for example, they could tokenize the debt on various networks. So something like the Stellar network or the XRP ledger, and basically eliminating the need for middlemen. And this would be freeing up trillions of dollars stuck in global banking systems and stuck in Nostro Vostro accounts, which is about 27 trillion. That money would be freed up. That could provide liquidity to the entire system, even help manage the government's debt. And, Bitcoin could even be used strategically, but it wouldn't be sustainable. The fact that Bitcoin's price surges every 4 years, okay, and it lines up perfectly with the government refinancing, the debt refinance cycles, that could allow large holders that are in early, including possibly government, okay, to sell at the top and extract liquidity from retail. And while this wouldn't erase the debt completely, it could help manage it in a system that thrives on constant debt creation and currency debasement. So this is a very complex topic, and I'll make a very detailed video on this very soon, specifically on that, tokenizing the debt and how blockchain could be a solution, how it will be a solution. But regardless, any of these positive outcomes that we just went through will still come with pain and consequences to the average person, to us. It wouldn't be an easy transition for everyone. To think that is extremely naive and makes no sense. It's unrealistic. Now, let's talk about the negative outcome, okay? Potential negative outcome. So if the US continues down this current path, okay, and loses global confidence from the world, the fallout could be much more severe and very real. I'm not being doom and gloom. I'm just going to give you some realistic outcomes. So if a US default occurs, that would destroy trust in the US economy. Now, one way this could play out is investors could dump bonds altogether, regardless if there are high interest rates and nice rewards, okay? And this could still cause a crash in the bond market and triggering basically widespread market volatility and stagnation across the globe, especially in the US. The second thing that would happen is higher borrowing costs. As bond demand collapses and bonds crash, interest rates go up and they spike. So businesses and consumers would basically face higher borrowing costs, okay, which is not good. This would be killing investment, reducing spending, okay, and shrinking tax revenues. And the third point to that is this will cause shockwaves. So a US default wouldn't just stay domestic in the United States. It would actually spark global financial chaos. It would disrupt trade globally, and it would basically tank international markets. That's extremely highly probable, and including the US stock market too. That would crash as well. The fourth point of that is the Fed would step in and overreact. So obviously things are a mess, things look bad. The Fed steps in after watching interest rates and bond yields spike due to the crash in US bonds. The Federal Reserve would likely overreact by trying to do what they do best, push yields back down. And in order to do this, they'd have to resort to printing a massive amount of money and completely debasing the currency and buying up US government debt because no one else would want it. So they have to buy it themselves. Now, this would require the largest amount of money printing effort in history just to counter the global dumping of US bonds, to counter that force. So to stabilize bond prices, basically, and to try to keep the domestic economy from collapsing, to prevent it from collapsing. So, but naturally, printing that much money would be extremely inflationary, and such a drastic move would basically further erode investor confidence in the United States and in the bond market, okay? So it would be such a negative outcome. And the fifth point, a controlled collapse, engineered reset. So how would this play out? Okay, after the sequence of failures that take place with the bond market, the solution would conveniently arrive, as it always does. The governments and central banks would have a public announcement. They would introduce solutions, introduce blockchain technology-based infrastructure. Maybe they'd tokenize the debt and restructure the system using the very, crisis they created to justify the reset. And they would step in and save the day. But there will be pain first before they do that. So even if it's controlled, there would still be a transition where there is some pain involved. So whether the future brings more of an optimistic or catastrophic outcome really depends on how these forces play out and balance each other over time. Because if the US can't meet its debt obligations, several of these outcomes could actually unfold simultaneously. That's extremely realistic. Some more extreme than others, of course. But ultimately, it all comes down to one thing, and that's confidence in the government in the United States. So, does the world still believe in America's ability to innovate, lead, and grow as an economy, as a world leader? Or will that confidence disappear by then? So, the US can continue borrowing and printing money for now. They could keep kicking the can down the road until they can't. But it can't do it forever without consequences. So if confidence breaks in the United States, a crash in the US bonds would ripple across global markets all over the world. Investors would flee to safe havens like gold, certain digital assets that have utility and long-term growth potential. They would move into commodities, perhaps, or even foreign bonds, possibly, because it might be seen as safer. Meanwhile, rising debt, interest rates would force other nations to follow suit, because when interest rates spike in the US, other countries have to raise them too. And this would cause inflation, igniting a global rate shock across the world. So in a default scenario, the fallout would be massive and global, okay? Foreign governments, central banks, institutions around the world, and even parts of the American public would take a hit. So, because this brings us to an important question, which I mentioned earlier, but I didn't answer. who exactly does the US government owe? Well, the answer is a wide range of creditors. That's who it owes. So it owns foreign countries like China, the UK, Japan, other central banks, commercial banks. It owes wealth funds, financial institutions, and just even people in the US public. And interestingly, a significant portion of the debt is also held by, obviously, the US government itself. So if there were a US bond failure, all of these parties would take massive losses, okay? Because they are the lenders. And the resulting fallout would be nothing short of catastrophic, in my opinion. And it would be a ripple effect across the world. So some experts actually argue that as long as inflation stays low and the economy continues to grow, high debt levels can be managed. That's what some economists believe. And actually the IMF takes a step further. They suggest that it's not the size of the debt that matters most, but it's whether the debt is sustainable over the long term. That's what the IMF is saying. So from my perspective, personally, if the US stays on this current path, it's only a matter of time before investor confidence collapses. That's what I think. And I think smart people are starting to recognize that already. That collapse would likely trigger a bond crash, spike interest rates, and put the global economy at serious risk, allowing the government and central banks to usher in the solution to the mess they created in the first place. And the solution will be digital assets and blockchain technology, and gold will very likely play a role. But it will come at a cost for society. And many people don't talk about that part. They think it's just going to be smooth sailing, easy transition. It's not. So just remember, the US dollar is the world's reserve currency. And if the bond market falters or fails, the dollar could follow. Okay? So taking the global financial system down with it. And that would affect us, people like us, you and I, regular people. And I know this scenario may sound unsettling. I understand that. But I look at it like this. Being informed is a strategic advantage. Okay? Now that you understand the risks, you can actually start thinking about how can you position yourself and your family wisely in assets that will eat up and attract that capital during a crisis, because money always moves from one place to another. And how can you position yourself in areas that will suck in that value and hold their value when we move into a new financial system? Okay? If you'd like to speak with me or my brother Verson one-on-one, we do offer video calls at Black Swan Capitalist. So in simple terms, what we do is we simplify the complex world of cryptocurrency, digital assets, and blockchain technology, basically helping you understand how it all fits into the evolving financial system and where the real opportunities and risks really lie. So we also provide macro and crypto analysis by heavily focusing on liquidity flows, business cycles, and monetary policy. Basically using forward-looking indicators and a 100% no hype approach. So if you're looking for guidance or clarity, I put the link in the description. You can go to our website. You can message me directly on Twitter, also known as X now. And I hope you enjoyed this video, and I hope it gives you some clarity on what may lie ahead so that you can create a plan for yourself and figure out how to approach it with confidence. Until next time.